Hi, we're Auction Conservation, and this is the Shoe Room Sessions.
Well, that's sort of our big thing, right? We're scaling, right? Make no apologies for doing big scale projects, because if we're going to do it, right, we've got to make this work at scale. And I think you're right. There's lots of very niche.
Even that word. Talk to us about what scale means in your world. Because if you go to an NGO, and again, so I'm going to get yelled at for this, but wonderful people, incredibly kind, doing the right thing and have helped do everything they can for the environment. However, there's still a press release on a 10 grand project. What does scale mean to you for a project?
Well, I suppose we're measuring our projects in the tens of millions of dollars, right? So the minimum would probably be 20, max probably 100 is what we've roughly got in our net cap portfolio. Similar in the carbon strategy. I mean, I'll talk to you a little bit more when we do the recording about the different things we do. But yeah, things that we're measuring the scale of the projects in terms of land area, in terms of thousands of hectares on each individual project.
Yeah. Which is, and that's what we need. That's the bigger, better connected, more impactful thing that's actually going to make a difference.
Yeah, exactly.
We should probably tell people who you are and what you do.
So I'm Carl Atkin-House. I look after the natural capital strategy, climate asset management. So that's our real asset strategy. We're putting institutional capital to work across a blend of different kinds of natural capital assets, anchored in regenerative agriculture, sustainable forestry, and then we have the third stream called environmental assets, which is where we predominantly generate the income from ecosystem services, so carbon, biodiversity, etc.
You've just covered in a 20-second opening what the entire sector's trying to do. Okay, let's pick some of those things apart. Can you tell us a bit more about the scale and about climate asset management in general?
Yeah, so climate asset management, we're a relatively young firm. It's our 5th birthday this autumn. So we were established in 2020. We're a joint venture between HSBC Asset Management and Pollination, which is a global climate change advisory and investment firm. We have about $1 billion of commitments across the first vintage of our strategies. We have 2 main strategies. The first is the one I've just mentioned, natural capital, which is most institutional capital, most into real assets. It's generating financial returns and impact at scale. Our second strategy is what we call nature-based carbon. It's mostly corporate investors. It's investing in land transformation, mostly in the global south. So much more of a project finance model, working alongside carbon project developers and project implementers, creating high quality carbon credits, returning them to the investors who then retire them. So very different products, but the thesis being the same. We're putting capital to work at scale, proving we can scale returns, scale impact. We have a third fund, which is specifically for Apple and its supply chain. It effectively has a leg in both strategies. So the way we sort of summarize it externally is 2 strategies, 3 funds.
Beautiful. How on earth did you get there? Take us on your career arc and life story.
So I'm a farmer's son from Lincolnshire. So I did agriculture as my undergrad degree.
Whereabouts in Lincolnshire?
Just on the Wolds, so central of the county. So not the flat bit, everyone thinks Lincolnshire's flat. So we're just on the side of the rolling hills.
I'm from the really bad bit at the north, so North Lincolnshire, just the south side of Humber Bridge.
Oh, are you? Whereabouts?
Barton upon Humber.
Oh, I know that well. Yeah, I was actually born in Grimsby.
I'm sorry.
Yeah. No, I don't tell many people that. So, so went to Newcastle, doing agriculture. I spent 10 years in Cambridge working with Bidwells, which is a sort of agri management consultancy advisory business. Obviously in that time, it was when the sort of first, second generation of the stewardship schemes, as they were back in the day, was coming. I've always been very interested in the interface of agriculture and the environment. I then set up a business with a couple of ex-colleagues, a sort of agribusiness investment management advisory business. Spent quite a lot of time in Eastern Europe, Russia and Ukraine back in the day when it was not crazy and you could go there and
just like, interesting as opposed to crazy.
Absolutely. Oh no, very, very interesting. And I could write books sometime about my time in Russia and all of the sort of the cultural barriers, shall we say, in terms of scaling business there. But yeah, involved in large scale agriculture.
Was the entrepreneurial commercial aspect to the environment and culture always something that interests you as well, rather than sort of the practical delivery? Or I think there's always business as well.
I think both. I've always been interested in the concept of sort of environmental economics and how you can monetize the environment. And obviously that's only really become mainstreamed, I would say, in the last, certainly in the last decade, right? When people have started talking about environmental markets and how we can really put capital to work in environmental delivery. I mean, the legacy's obviously been very much support schemes, grants, different kinds of capital coming in. So I spent a bit of time overseas in Russia and Ukraine. did some consultancy advisory work around farmland investing, was involved in a couple of iterations of farmland funds, which for various reasons didn't quite get off the ground. One got caught in the headwinds of COVID. I was approached by Cam nearly 3 years ago.
Just before I leave that chapter, I think people often underestimate the importance of timing in the investment world.
Yeah.
Because those global events, be it a financial crisis, be it COVID, be it Ukraine war, can totally derail years of work, right?
Absolutely.
Timing's so important.
Absolutely. So I've got 2 examples of that. One, the very first farmland fund I was involved in, we were going to go public on the 15th of September 2008. We all know what happened on the 15th of September 2008, right? Beginning of the meltdown of the financial system that time round. And then the second time round, I was actually in Australia doing some due diligence on a farm we were going to buy end of February 2020. We were going to launch a listed farmland vehicle. And of course, again, the market's tanked and everything shut down, of course. And everything shut down for nearly the rest of that year, right?
Absolutely. Okay, so Climax Manager come knocking.
They do. So I joined.
What do you think they saw in you to come knocking?
So they wanted somebody who had got some experience in large scale agriculture and putting capital to work in ag. So I originally came to look after the agriculture part of the portfolio. And then we had a bit of a shuffle around middle of last year. I took over leading the whole strategy. So stepped up effectively to umbrella ag, forestry and carbon as it is in our strategy. So very much, I suppose I'm a little bit different to a lot of people in our business. I'm an agriculturalist by background. My colleague James Bullen, who's our head of asset management, he always says I'm a buddy boots forester. He started his career as an operational forester and worked his way up through some TMOs and forestry management. But obviously, a lot of people in this space have come from a finance or investment background and moved into natural capital investing.
I would assume so looking at it from a CEO perspective, having people in the various verticals of my business who have technical expertise and knowledge in it gives you just a richer approach to risk management because you understand the operational risks that are happening. I think where I sometimes see it, that financial services are very good at technical risk management from a regulatory spreadsheet and nuts and bolts perspective. But when a crop issue is going to present itself or a wildfire risk or a disease. So that must give some real confidence across the business that you guys have got that technical expertise in there.
Yeah, I think so. I mean, I always like to say the great thing about our business is there's no groupthink, right? So we've got people from environmental NGOs right through to people from sort of industry practitioners, through to people from more traditional investment management, investment banking backgrounds. So a real kind of spread of views, around the table, whether it's an investment committee or even within the team when we're talking about projects. But I think the risk thing is extremely important because, there's a tendency in this space to look at the risks from a very more kind of theoretical financial investment perspective. Actually, the real risks that worry me are, the trees are not going to grow or when we're operating assets, there's a lot of operational risk in terms of, the partners we have on the ground, making things happen. So there's a huge amount of operational execution risk, obviously biological risk because we're operating in unbounded biological systems. And for all of the risk management we put in place, and obviously we have all the things you would expect us to do, fundamentally, there's certain things we can't manage completely. We just have to close the range as much as we can in terms of the performance.
Awesome. So how long in your role currently?
So I took over looking after the fund middle of last year. So again, been very interesting for me. We've since done quite a big forestry transaction in the US, which again has been very interesting for me. So it's in the Pacific Northwest in Washington State. I think that's one of my favorite projects we've done actually in the Natural Capital Fund because I think it's a sort of perfect example to me of an asset where we're managing it for timber and carbon. And one of my jokes always when I go to these forestry conferences is it's okay to chop down the trees. Sometimes you get 3 or 4 panels in and everybody's just talked about carbon, and actually sustainable building materials, decarbonising construction is really important.
We had Richard Kelly from Foresight on the podcast. Okay, he was great. I got a load of stick from people in the, you had a forester on. I'm like, yeah, he was brilliant. Yeah, but he does forestry. I'm like, uh-huh. And ultimately their problem was, but they cut down trees. And I'm like, right, so we don't want native grown timber for building materials? And they were like, well, you don't do forestry. I'm like, I don't do plumbing either, but I recognise we need a plumb. Like
Yeah.
we absolutely recognise the need for high quality, sustainable UK grown timber, and they do that brilliantly. We don't. We're not foresters, so we're not going to try and be great in their world. We don't have a right to win in that world. We do what we do, but we recognise there's tons to be learned from there. So I'm agnostic to solution, Carl. We need 50 solutions, not just the OC solution. So I think we end up in when we're recording this at the back end of London Climate Week, and you end up with various different people trying to solve the same problem, arguing with each other because their version's better than somebody else's. And it's like, we need everybody. We need everyone to be solving.
Couldn't agree more. And look, I've said this, well, I think we have a pretty good relationship with most of our peers, who are competitors. But I've always taken the view, we all need to succeed because the space is still very nascent. It's not in anybody's interest that anybody fails. And actually, there's so much sort of heterogeneity about how people view the space, the segmentation, the amount of risk they want, the operating model they want, the geographies they want, that actually there's room for everybody because everybody's something different. Some people are UK focused, some people are very sector focused, like that we just do forestry or we just do ag or we just do nature restoration. And actually all of those people have got valid viewpoints. I don't think I very much don't ever get into the view of, our model's better than your model or, I don't think you should do that. I think actually from the point of view of the space as a whole, because it's growing so rapidly, we need all of those people to be successful.
I completely agree. We did our announcement about a new ceiling price for nature-based UK carbon credits on earlier this week anyway. And on stage I went, I'd like to thank Nattergal for hitting £100 a tonne because that gave us a ceiling to beat. And I want to extend the challenge to Restore and Rebalance Earth and Grey Yellow and everyone. Come and beat it now.
Yeah.
That's great because then we're all pushing on. I came off stage and people from each of those teams came and gave me a massive hug for the shout out. How is that not better? We want competition, but collaborative competition, pushing everybody forward.
Couldn't agree more.
Yeah, spirit of that is awesome. You are at the absolute zenith of moving capital in this market in real meaningful numbers. What do you look for in a project or an investment? How do you know if it's a good one?
So I think that the starting point is we need to be able to prove that we can scale this, is my first point. So I think we make no apology, particularly in the Natural Capital Fund, we're doing large-scale ag, large-scale forestry, large-scale...
I understand what scale you make across easier.
So, I think that the smallest project we would do would probably be sort of 20 to 30 million US dollars an individual project. So we're talking in the thousands of hectares.
This isn't the work in those cases whereby two things can be true, right? So you see a wonderful wildlife trust announce a £10,000 project, and that's lovely and nice, but it's not moving anything forward in terms of scale or a needle. And you're putting a huge number of zeros on the back end of that. We're talking about real, meaningful impact and scale there. And, you talked about institutional investors, you talked about corporate investors, and probably the investor everyone wants in terms of Apple, like they'll be the top of everyone's list. They're not coming for those £10,000 projects, right?
No, exactly. And I think, I suppose there's a number of points, isn't there? I mean, to get the kind of capital interested we need, it's got to be scalable. Because even for people that have got specific allocations to natural capital, it's 1 or 2% of their total portfolio allocation, right? So it's got to move the dial to be worthwhile.
Why does it need to be big? For people that don't understand, why is that scale important to them?
It's important because I suppose bandwidth in terms of management, in terms of governance, in terms of ability to oversee it. It's important.
There's not 50 people there overseeing that pot of funds. There'd be 1 or 2 fund managers that don't have. It's not efficient.
No, and even in many big institutions, it'll still be as a join on to infrastructure or maybe alternative real estate, right? So it's a lot of investors have not even got dedicated teams. So I think the efficiency of the allocation is extremely important. I think for us, just two things. One, the efficiency of doing the deals, because obviously, as I'm sure we'll get on to, a lot of these projects are quite complicated. You do need to do a lot of due diligence. There is quite a lot of upfront cost, obviously in terms of consultants, in terms of legal structure and implementation. And then, of course, in terms of management, that it's just more efficient. What we're trying to do, I guess, particularly also with an eye on the exit, back to where we started, because it's okay to make money and we want to make really good value growth in the assets that we want. And building institutional scale in a relatively small number of subsectors, I think, is important because that then gives us, I think, more optionality around the exit at the end.
So you mentioned time there. What does a fund life cycle typically look like for you in terms of a time period?
So we're a 15-year fund, both of our strategies, the carbon strategy and the natural capital strategy. I mean, again, that's a good intellectual discussion. Should they be open-ended? Well, yes, and there are lots of people doing good open-ended evergreen funds, I think. My view is when you get much less than 10 years, I don't think you can really be saying that you're doing true transformation. So I think, people that are looking to make quite quick returns, this is probably not the model for them.
Because on that 15 years, can you step people through the main chunks of that 15? What would happen in the different phases?
I suppose that obviously what we've also tried to do in our portfolio is build both development projects, a greenfield, and then established projects where we're taking existing assets and transforming the management. But if you think about a transformation project, it's really land development, which is, can be 2, 3, in the case of our macadamia project in Australia, we're not really getting serious commercial production until year sort of 6, 7. It's got a long J curve in terms of tree development. So
and that means spending, right?
Yeah.
You're spending way ahead of yourself in terms of time, investment into that before you're seeing the return.
Absolutely. Yeah. Yeah. So it's a big J there. And then obviously moving into, operational implementation, obviously maximizing cash flow generation during the core whole of the asset, and then looking to exit, around the 15-year period.
Really interesting. And in an investment like that, do you have a parameter where your sort of target return is for a fund like that? Do you have a stated expectation?
Yeah. So our first vintage, we were targeting 10% IRR gross. We're going to try and be, I'll come to it a little bit more, but we think we can be a little bit more ambitious than that in our next fund.
Psychologically, if you internally think it's 15, do you say 10? Is that how it logically works? Or if you, is the expectation that, no, 10 is getting hit, or do you allow for it? How do you think about that in terms of the psychology?
I think you've got to be confident that you can deliver returns is the most important thing. And I think one thing that we very much try to do, because we're balancing a range of different kinds of projects, they obviously all have different return and impact profiles. Forestry typically is lower returning than agriculture, for example. And then ecosystem services, a loan project's probably somewhere in the middle, but obviously the markets there are less proven than they are for ag and forestry, where you've got a good underpinning of the income from what you might call traditional income sources. So I think it's very much about getting that expectation right about the blended risk return across the overall portfolio.
Interesting. So you mentioned portfolio there. When you're designing that fund sort of ahead of your 15-year window, have you got a pretty well-developed idea of what your allocation of the totality is going to be in each of the individual pots, or does that flex and adjust a lot?
We've got broad allocations. So we've skewed a little bit more towards ag because of the return opportunities that brings. Next, forestry, and then we've deliberately kept the standalone ecosystem services component relatively small because that's obviously a more nascent market.
Relatively small in your world, massive in everywhere.
That's it. Yeah, possibly, but in terms of the overall portfolio put to work, yeah.
That's fascinating. And we went back to picking a good project. So how do you, because you'll get lots of opportunities that come your way, how do you select the good ones? What is it you look for that makes you go, we can add some value here, this is a good opportunity?
Yeah, so probably agriculture is probably the best example, I would say, which is the starting point is there has to be a story here about a shift to regenerative land management. That obviously is the most important thing, that we can develop a natural capital impact thesis. So we're either taking land that's got a suboptimal land use or land that's, that's not being optimized in terms of its performance. So if you think about Southern Europe, for example, a lot of the land that we're planting to almonds and olives, 15, 20 years ago would have been tobacco or the kind of Mediterranean crops. It's fallen into a sort of hodgepodge of mixed use, partial use, no use in the last 10 years or so. So there's a real transformation story about we can transform this to, a large scale investable agriculture project, but demonstrate, best practice around regenerative management. The second thing is we obviously want value chains where we believe there's a long-term positive thesis. So one of the reasons we really like permanent crops is, they're aligned to the provenance, to the health, to the sustainability, shift to sustainable snacking, sustainable protein. So there's a real kind of strong alignment, I think, about sort of macro themes around that. And then the third thing, and probably the most important thing of all, is finding a philosophically aligned operating partner, because you clearly can't manage these assets from an office sitting in London or wherever, right? You need good people on the ground who can make this work. And, I always say, Unfortunately, that screens out a lot of small people who are, doing very interesting things, but they just can't work with institutional capital like us because we're quite demanding, particularly around reporting, as you would expect. But it does also screen out some very big operators who, frankly, pay lip service to sustainability, but not really interested in going on a journey with us around, regenerative management and really developing, natural capital impact metrics.
Really interesting. So what does that process look like when you're doing your due diligence on the operating partner?
Well, so I think that the starting point is, are they aligned with us in terms of the overall thesis, which is
That a written exchange, or is that a verbal meetings, a combination of both? How do you actually dig into that?
the honest answer is it's a combination of lots of different things. How do we come across opportunities? It's slightly different in different geographies and in different bits of the sector. So let's take forestry. Forestry is a very well-developed market. Lots of forests are publicly traded or they go through public brokerage processes. That's just how the market works.
Maybe quite a narrow band into like, everyone knows what things are worth, and it's
Absolutely, yeah. That's probably the more developed part. I think in agriculture, some markets are more developed. So the US, for example, is quite a well-developed farmland market. It's had institutional capital in it for a long time, although I would say historically more as a sort of passive real estate investment, really, rather than a proper impact investment. But a lot of the agricultural opportunities we have in our portfolio came off market. So they came through operating partners that we've identified we'd like to work with.
I think people often forget that's an absolute tacit endorsement of you, because those off-market opportunities only come if people want to work with you, trust you, value the way you work as well. They don't come overnight. You rock up some capital tomorrow. You're not just going to start getting those off-market opportunities. They come through relationships and time. I think people underestimate that.
I mean, I hope it goes without saying, but I think, relationships are important, period. But I think especially in this space, they're extremely important. And I think, we're also very cognizant about being, good corporate citizens and good operators. So, using our operating partners as our local interface, everything from initial stakeholder management, finding opportunities, managing those initial relationships. The last thing you want to do is rock up somewhere and everybody knows you've got institutional capital from London, right? Because it doesn't set the right tone. You might indeed well move the market in terms of values and what we're trying to achieve. So I think
The old football transfer system, if Man United wanted the player went up. Yeah. If people know when we first started buying land in the UK, we didn't tell people we were coming to buy a lot of land because the price would have just gone up straight away.
No, exactly. So I think assessing those markets and thinking about how you assess them, and what's your entry point and what's the strategy you follow is important. And building those relationships. I mean, again, it's organic. A lot of them have come from relationships that people have within our team. We have done a little bit of initial outreach in some of the more developed markets. So say the US, where there are more obvious established partners we might want to work with. Iberia is much earlier in the curve. So, the flows of institutional capital into regen ag in Iberia is, I would say, really only happened in the last 8 to 10 years. So those relationships have been very much built upon a more kind of personal and bespoke basis.
You mentioned the team there quickly. What does the team look like under you in terms of composition?
So the total team in London is just over 50. About half of those folks are in the investment team. We actually have a pooled team of sort of investment managers, analysts, associates. So there's myself and the two other fund leads and a head of asset management, and then we have the rest of the team is sort of pooled between us. So
it's really interesting. Yeah, it gives people a lot of variety in terms of what they look at earlier in their career.
Yes, absolutely. I think what we've also sought to leverage, and I suppose one of the things we like to think is one of our USPs above the sort of just traditional sort of farmland and timberland managers, is because we're so involved in the carbon space and we're talking to a lot of carbon off takers, and obviously we have a lot of investors in our carbon fund who are very close to the carbon market. Those linkages that we can bring in terms of ecosystem services, I think, is one of our key value adds over what you might call just the traditional real assets management of natural capital.
Yeah, that makes sense. So you mentioned the sort of behavior of the operators and their sort of philosophical positioning. Are there any other red lines in terms of projects that that's not going to work for us, we're not going to touch that, either from an ecological or economic perspective?
So I think, so if we take the ecological one, I think social license is extremely important to us. So maybe back to where we started, I think, the asset that we acquired in the Pacific Northwest, sawmills and logging is a really important part of that local industry. So if we'd acquired an asset and just said, right, we're going to turn this into a carbon forest, and we're not going to be cognizant of the impact on the local community of that, I think that's extremely important. So being a good corporate citizen is very important. I think we're very, very cognizant around, or very, very careful, I should say, around the issues around land use change. So, we clearly wouldn't do projects that, in some aspects might be nature positive if they were doing other things that were nature negative. So we're very careful about looking at sort of wider impacts, and not just at our project, but also within the wider ecosystem in which it fits.
We don't buy grade 1 to arable land. We target degraded grouse moors. We target land that's been hammered with an inch of its life. It's trying to be something it's not, so that holistically we can say this is a positive effect just by stopping the bad before we even try and do it.
Yeah, good. Yeah, this is very, very relevant in New Zealand, say, where you probably know there's the conversion of farmland to forestry is very sensitive.
I know nothing about that part of the world better than I love the way to play rugby, so please.
Yeah, no, so there is a little bit of a sort of political sensitivity around converting farmland to forestry in New Zealand. So again, we've taken exactly the same view. We only would ever consider what in New Zealand's called land use class 6 and above, which is the really most very marginal land, which is not particularly suited to livestock farming for exactly that reason. I think the other thing I would say is we're also very careful when we look at projects that are really around kind of that's what I'm looking for. Ecosystem, I suppose, maintenance rather than ecosystem advancement. So what's the counterfactual that we're looking at? Making sure that there is real additionality, because I think we can all point to examples, I suppose, in the press, and there's been a number of them where, is the additionality that is being claimed to be offered by these projects really true?
So being able to pick your brains about this is an absolute treat. I think the additionality point in the environment sector is just madness. You don't go to a restaurant and they don't bill you based on how many extra calories are in that meal versus what you would have eaten at home. Or they don't bill you in, like, if you were to eat the same thing for dinner every night of the week, but you enjoyed this a little bit more, we'll bill you the difference. Have you ever seen any other market that requires additionality in the same way, as opposed to billing and pricing for just the product and service received?
That's a really good point. And I'll be absolutely honest, I hadn't thought about it like that. But I think that's a fair argument. I guess what I would say to you is,
it's probably because you haven't sat through the 3 terrible things I saw this week that each time we just bagging on about additionality, and I was like, I don't get it. I don't get why. So yeah.
Yeah. But I think the start, I suppose 2 things I'd say. One is we're very careful about what projects we get involved in, obviously, because of reputation, right? Yeah, and I'm not suggesting for a minute that that projects that are focused on maintenance or avoided activities, or that I'm not suggesting for a moment there isn't a place in those. I think what we have sought out to do in the projects we've gotten, and this is partly philosophical for us and partly, I suppose, the expectations that we've set to our investors, is that we want to prove that we are creating that additionality. But it's a really fair point, and I take your argument that maybe as a space we have become overly focused on that.
I think it's like a pendulum. So I think we've got there as well. And so you talked beautifully then about the sort of social impact of the sawmill society in the Pacific Northwest. And quite rightly, that's creating jobs and providing homes and income for that local community. In Scotland, we're now seeing where the demand for social impact has swung so far on the pendulum that Scotland risked making themselves irrelevant for natural capital, because we had to deal with local protesters who loved what we were doing about a woodland restoration scheme, but didn't like the concept of capitalism. So we're going to object to our scheme because they had no other mechanism to object to capitalism. We were like, oh, so you don't like the trees? Oh no, we love the trees. We really like that. And sorry we're doing this, but we don't like capitalism. That's not social impact. That's madness. We were creating jobs and homes and all those things. So I think that pendulum swung too far, and a bit like additionality for me, it will come back to something more sensible. And we're learning. This market is so new, and we expect it was nice when you mentioned about the forestry and how that's kind of standardized and developed now, and it's a narrow range of value and everyone understands how it works and things. People seem to be wanting carbon credits and measure to be there tomorrow. And we're going to miss so much creativity and innovation if we do. Like, I feel really fortunate to be working in the natural capital space at the moment, because This is like the foundations of the internet, where search engines were being developed and all the exciting stuff was. We're going to fast forward 10 or 15 years and MR monitoring, reporting and verification is going to be standardized. Carbon quality and pricing and reg, it's all going to be standardized. It'll be boring then. We'll need the next interesting one. So I like the fact we don't have all the answers yet. Or when everyone starts to criticize bits of the carbon market because it's not perfect. How long's forestry been around as an asset class?
Oh, decades.
Exactly. So we're just starting, right, Galvin?
Completely agree. Completely agree. And I think, that to me is one of the things that makes the sector really exciting. I mean, obviously it's great and it's hugely impactful, and I really, enjoy what we do and believe we are making real impacts on the ground. But actually, we're at the cutting edge of trying to figure this out, right? I always probably get told to say carbon is carbon. Obviously, carbon isn't carbon. That's a huge amount of noise. But then compared to nature, where we're probably at least a decade behind trying to unpick that. It's so bespoke, so resource specific.
I had a line this morning. Someone asked me about nature and carbon in this piece. I said, carbon is the Nokia to nature being the smartphone. Yeah. The technologically, the scale, the growth of it is people have no idea what's coming. They're looking at this Nokia going, we can play Snake on this. They have no idea what I'm talking about because of the age profile. Excellent, we do. Oh, okay, thank you. But they're not the same thing, right? Whereas, carbon to nature is going to be completely transformative.
No, completely agree. Yeah.
Super exciting. One of the challenges people get, and I think, and it's really kind of you to come and do this because investors, the natural capital world, environmentalists, they talk different languages and they assume all the people think and do and say. And you'll hear some environment sector saying, oh, all investors need urgency. It's all about profit tomorrow and they're all driven and no one's patient. You're talking about 15-year time periods. Do you feel a pressure in terms of the time, or are you seeing investors taking that more patient view? Or actually, I suppose, is 15 years not thought about as a long time in the investment world? How is time considered, I guess, is my question.
I mean, I guess the starting point is there are a huge range of views on this, and obviously every investor views the space differently from both a market depth, a liquidity perspective. I think my view's been very much as I think probably what I said a moment ago. This is not a private equity get in, get out, turn around 5 years space, right? Certainly not in the core real assets part or the real project implementation.
I never think we've really seen a model of that time yet. Have we seen how do that natural?
Not really. No, not that I'm aware of. I think
Jeremy's done some stuff at Highlands Rewilding where they bought and moved things on, but that was a function of the market moving in a way I hadn't expected rather than an intentional flipping model, I think. So I don't think anyone's tried that yet. I'm sure they will at some point.
Yeah, no, I think so. But I think the starting point needs to be think about your overall portfolio construction, portfolio allocation. I mean, what's quite interesting, I think, particularly from the institutional space, is even in the 2.5 years that I've been at CAM, the number of institutions that now have natural capital as a specific bucket within their overall portfolio allocation strategy is increasing. There's still a huge number that don't. And I've had conversations from everything people say, hang on, this is green infrastructure, isn't it? It's like, well, you can think of it as green infrastructure, right? If that's the bucket you want to put it in.
Yeah. How do you feel about that language point about it being called green infrastructure?
Personally, I don't have a problem with it because I think you've got to be pragmatic, right? We need to put capital to work in the space. If you go to an institutional investor and they say, we don't have a specific natural capital allocation, go, but could you put this in your infrastructure bucket? And they go, maybe. It could be new infrastructure. It's a way of unlocking that capital, right? So I think you've got to be pragmatic. At the end of the day, we want to get as much capital into the space as we can.
That's what I think. So shout out to Rob Gardner and Ewan Murray. I think they do that really well. Yeah, from where they've come from. That's a real useful narrative they talk about. It hasn't been one that, and I don't disagree with it at all. I don't know how I feel about it yet in terms of whether it fits our vernacular and the way we speak, because I think Rob and Ewan are coming on trying to get as much into the sector as possible, trying to make it comfortable and easy for it to be accessed. My model has always come from the disruptive, different environment side of it, going, no, this is totally different from the environment sector. This is exciting. This is opportunistic. And I think we kind of need to sort of like intersect and meet in the middle with those gears meshing together, because both things are true. We'll need multiple different solutions to it. I suppose that shows the type of capital as well. Like, I'm not working with institutional capital. I'm working with private investors who I can literally have a conversation with and say, this is exciting, because they're sophisticated people who want returns and have investments in every form of asset class you could. But there is a passion piece to this as well.
Yeah. I was just going to say, I think that very much is a function of the kind of capital you have. I mean, I remember that sort of institutional capital, insurance companies, pension funds, it's naturally quite conservative, quite slow. There's a lot of inertia in terms of moving.
New and different means high risk and problematic.
Yeah. And so, there's got to be a strong element of reassurance here that actually, point to other institutional examples, point to institutional sort of parallels in different sectors. I mean, the analogy I always use is, it feels to me a little bit like natural capitals, where infrastructure was 30 years ago, where it's just on the cusp of building in its own asset class and saying, right, now I understand for, somebody very, passionate and disruptive like you, that might be a bit of a pedestrian way of putting the model over, but I think the kinds of people we're talking to when we're talking about an institutional fund, that's the kind of language we need to use.
100%, and I'm super grateful we have Rob and you doing that, because so I can stand on stage and say the environment sector and natural capital is in the dial-up age of the internet. It's going to be broadband and Starlink, and it's going to go to all those things.
Yeah.
That language absolutely appeals to talent coming into the sector and to the private investor and to venture capital and that side of it. But it needs both, and where it'll intersect is, I'm going to build out our portfolio with probably, somewhere around 250 million in valuation now. We're going to come to a point where I'm going to need to unlock institutional capital because of the scale and size.
Yeah.
Well, at that point, as we bring those two, like the end of a great Guy Ritchie movie, the threads will come together at the end, whereby the institutional capital is ready for the scale that's there. Things have progressed enough. The ratings curves that we're seeing, the insurance, the valuation, the monitoring reporting and verification, the regulate, everything is in place such that it's now a comfortable asset class, and it's not even unusual anymore. Yeah. So we have the scale, and we need them both.
I absolutely agree.
This is why I would enjoy on the podcast completely. How far do you think, what would that look like, do you think? So you and I have talked about the UK before and how the scale, you're not getting the same type of forestry projects that you would get in the Pacific Northwest of the UK potentially. What would the ideal style of portfolio look like for a natural capital play in the UK? What would that thing, if you described it, you'd be like, that's amazing, that's what we would want to see?
Well, okay. So my starting point is, look, as I said right at the beginning, my background is UK ag, UK land management. I would like nothing more than to see UK natural capital scale. Point number one, and some of the names you've mentioned and others, folks I know well. I've always said, I hope you get your UK natural capital funds, projects, however you structure them to work, because it's good for all of us in the space.
Yeah, you've never been anything but celebratory and positive about the sector in this country. So
yeah, no. I think that the challenges for us are several-fold. One is the kind of returns we're looking for in the more kind of traditional end of the spectrum, so ag and forestry. It's just difficult to get those returns unless you stack them up on a long-term capital growth play, right? And again, there's people have been investing in UK farmland and forestry for decades, right? And have done quite well out of it. But the model's been very much about long-term value growth. The income from both kind of core production activities and certainly from ecosystem services has been very, very small. Whereas we want a much more integrated model where we're generating returns from farming, forestry, from ecosystem services, and we're actively creating value through land transformation, not just riding a passive land appreciation wave. Not saying there's anything wrong with that, but that's what a lot of people in the UK have done historically. I think for us, what the really interesting part of the UK space is what we call environmental asset space. So, we've looked over the years, and some of this under my tenure and some of it pre my time, peatlands, salt marshes, BNG, other kind of forms of landscape restoration, where it's more of a kind of project finance, or it would be a JV with a landowner and developer working together. So not an asset acquisition and management model, maybe like we're doing in other assets. So I think there's definitely space in that to grow. I think one of the challenges we have, across the whole of Northern Europe, but is high fragmentation of land, very complex and often competing different priorities from landowners about why they own land. I mean,
it's not easy to buy and sell land.
No. And even getting a consortium of private landowners together to do some kind of collaborative scheme.
Yeah, the sort of farming cluster style approach. Lot of complexity, hugely resource intensive and expensive from time to time.
And again, so I've said to others, look, again, really support the model, hope it works. We just don't have the bandwidth or the capacity to be managing those levels of complexity projects. So that for me is the real big challenge in the UK. I mean, I think I've also got quite a lot of frustrations about the UK market in that I think, we talk a good game globally about natural capital, but then actually you look at where we are in terms of the development of some of our ecosystem services markets, we're a long way behind a lot of people. For example, in both Australia and New Zealand, really well-established compliance markets, we can create ACUs in Australia, we can create NZUs, from our forestry there, we're selling them into a carbon market that's robust, that everybody understands, where the pricing's pretty transparent. And I feel a bit frustrated in the UK where, for all of the, what I would call sort of global intellectual thought leadership in this space, the practicalities of our market is they're quite small. The codes that we have are relatively limited in scope. There's big gaps in the carbon, as you'll know, particularly around things like soil, right, where it seems we're a long way behind a lot of other countries in terms of developing those processes.
Where else are some good ones to point to? So, the one I'm aware of is sort of Adam Davies's group and what they did a water trade markets in the US that kind of were a precursor to BNG. I mean, he's had $1 billion through their water trading, water quality offsets in the past few years. Yeah. Is anywhere doing soil carbon really well? Where can you point to the hub areas that are developed? So you mentioned Australia and New Zealand.
So Australia is probably the best example, right? So there's an established methodology for ACCUs to create soil carbon, something to regulated markets. So, but even as voluntary soil codes, people like Vera and Goldstein, right? I think I'm just aware there's a lot more projects in some of the other geographies that we're operating now. Part of that might be is also because I'm probably not quite as close to the UK market as I used to be. So I know there's some really good stuff going on here. I know there's a lot of voluntary soil, people working in the voluntary soil carbon space with farmers.
So we're not yet actually. So Chris Winter, our amazing director of Natural Capital, and I, we've adopted a openly skeptical stance on soil carbon at the moment. Now, I hope we're wrong. I want to be proved wrong. We've got some resource coming in specifically to look at this at the start of next year. So right now we haven't put a penny on the soil carbon across our portfolio. Mm-hmm. So we currently sat on about 43,000 acres, soon to add another one to the portfolio. And we've taken baselines, we've done some initial monitoring so we can measure change over time. Yep. But we're yet to monetize or consider a value on our NAV for the soil carbon. So if we're wrong, fantastic, because everything looks good. We just didn't have the confidence yet in the site to put a pound sign on it and then defend that. So
we took the same view actually in all of our European ag. We didn't put any carbon in the base case underwriting. So any soil carbon we create, or indeed carbon we create in the perennials, is upside. Now in Australia and New Zealand, we did put a small amount because I felt more confident those markets have got established liquidity, they've got established benchmarks. But I think I totally agree with you. I think in markets where it's still more early stage, you want to be taking that as upside, but not building that into the core base case.
We took a similar approach to you there. I agree with the sentiment around the UK almost. It's not arrogance, but it's like posturing and positioning, and we're trying to say we're leading globally. Why do you think we aren't? What do you think the barriers are to us actually putting our money where our mouth is and leading forward on natural capital?
Well, I think in addition to some of the points I mentioned, I think the other reality we've got to accept globally is we're quite a small country, right? So in terms of the impactfulness of being able to scale capital, even in large projects in the UK by global standards, they're pretty small. So I think, when you add together the scalability challenges, the fragmentation challenges, the distortion of capital value challenges, the complex reasons why people own land in the UK, which I think because of all the other reasons is, we have some, a lot more people, I would say, own land in the UK for non-pure economic factors, right? You ain't got to look at what, UK farmland and forestry prices when you plot them and try and correlate them versus, say, somewhere like the US, where there's almost a perfect correlation between farmland prices, rents, commodity prices, farmer income returns.
Yeah, UK is completely illogical.
Yeah, for all sorts of reasons. Yeah, but I suppose I always think this is probably not a very good analogy, but there's almost sort of an analogy here with ag tech, right? UK has been a global leader in ag tech. Actually, the penetration rates in the UK are pretty small. The farms in the UK are pretty small. The uptake was pretty poor. Actually, most of the people that have incubated those businesses in the UK have scaled them in South America, or they've scaled them in former Soviet Union or the US. But actually, so it's about, I think, where do we lead? We lead on the kind of intellectual thought leadership, the models, the thinking, the systems. But actually the people here that are really making it succeed are taking those deliverables elsewhere.
So we had the wonderful Charlie Courtney, who's the old Devon on the podcast.
Yeah.
He's also in the House of Lords, and he's a practicing lawyer, UK and America.
Yeah.
And he said exactly what you said about the intellectual capital, the thinking behind this product. That should be our next big export. We don't have the scale or the land to do it, but the thinking and the systems and the process and the way of building the infrastructure, that we do if we're brave enough to get out there and do it.
Yeah.
Penny, can we like link to Charlie's episode somewhere in here, up here, which would be awesome. We announced our carbon sale on.
Yeah, I saw that. Really well done. That's a really good benchmark for the market. And good.
Yeah, pretty short story. So Kerry McCarthy, the climate business, spoke before we did. If you had her job for a day, what are the policies or interactions I'm not suggesting you take it all, because being a politician is a horrible job. But if you did and we managed to persuade you to do it, is there anything you would adjust in terms of the regulatory landscape to open up the floodgates of this capital that I do believe wants to get into the sector if the projects and opportunities were there?
Well, I suppose at the risk of repeating what I said earlier, I think a bigger role for government would be helping to coordinate some of these regulatory frameworks. I'm not suggesting that we necessarily need to create compliance markets, but I do think there's a stronger role for harmonization standards. Soil carbon is a classic case in point, right? Where I think it feels to me there's been a little bit of a lack of leadership, particularly I would say in DEFRA. I feel, one of the great missed opportunities I think we've really had in this country is, and I'll put my hands up. I was a card-carrying pro-European, but one of the good benefits of Brexit was we get out of the cap. We can have some really radical thinking. So all this about green Brexit. Let's let the market pay. Payment by results, etc., etc. And 5-6 years later, by the time it's gone through endless rounds of iteration. But it feels to me, without being too rude, that what we've largely done is just change the label on the direct payments. And you have to do more to get them now. But fundamentally, the model is do X, get Y, right? It's a very inputs, but and this whole kind of, it struck me. We went about the debate the whole wrong way. The whole wrong way was we used to get 2.5-3 billion through the cap. How can we repackage that and justify keeping it? My argument should be, how big's the market for the environment? What's the market failure? How much do we need to plug with public money to get it to work? Now, that might have been 3 billion, but it might have been 1 billion, or it might have been 7 billion, right? But we went about that exercise completely the wrong way.
Your mind's brilliant. And so I've been screaming every time people talk about subsidy. In the sort of agricultural environmental world, we've forgotten what the word means. We think it means revenue now. Like landowners think, oh no, that's my money for. No. It's meant to fix a market failure.
Absolutely.
No other market is it treated that way. And we just wedded it in. And it comes back to, no farmers, no food, which is the most ludicrous simplification in the world. Because, well, of course there's no farmers, there's no food. But also no climate, no food. No water, no food. No pollinators, no food. No people to pick and produce food, no food. There's just oversimplification. And instead of actually addressing the issues, let's make sure the subsidies are in there. And I've even seen friends who are farmers and landowners fight for something that's a system that doesn't work, that they know, I can't profitably this, I'm losing money, but I've got to keep it what it is. Shouldn't we try some? No, keep doing the bad thing that's not working. It's just madness. I don't know how we'll break the cycle.
Well, the problem is, and this is a bit of a global problem, I think across, particularly ag, but also a lot of natural resources, there's just so much inertia, right, and resistance to change. And some of that's cultural. Some of it's a legacy of subsidy or, well-meaning historic interventions that governments have made over the years that have created a certain set of behaviours that then it's very difficult to change. So I think, honestly, the biggest lever we have is generational change as assets change. And I suppose one of the things we do, particularly in the ag bit of what we do, is we're working with operating partners, often that have evolved out of being family businesses to becoming more specialist corporate operators. They have a capital gap. They can't keep growing their business by buying more land. We can buy land. We can partner with them. They farm our land. We're helping to fill a capital gap in their business. And actually, yes, there will be a lot less farmers. I don't think we should be scared about saying that. But if we've got smarter, better, more aligned farmers, who are more aligned with kind of the multiple objectives that we expect land management to deliver in the future, then surely that must be a good thing.
People talk about a quote-unquote just transition.
Yeah.
Like one's ever happened before. So I listened to this amazing podcast that talked about when the tractor first came along, everyone was talking about farm workers and things like that and to try to protect these farm workers in a just transition. And you had government debating the introduction of the tractor 10 years after every farm had one. Yes, that pace was just out of whack. Go back to the coal mines shutting down in the just transition. Go back to the people who are doing typing pulls when word processor. There's not going to be a just transition. There's going to be people who benefit from a change and embrace a new way of working, and there's going to get people who get left behind and do not benefit from that at all. I think what we have is the ability to choose which way we want to work with that. Same in a business sense with AI right now. Either embrace AI or somebody else will. You don't have to, but the consequences of that, those people will come by. I did a keynote a couple of days ago. There's a guy sat in the front row fact-checking everything I said on ChatGPT. Our team was sat next to him, and he was fact-checking it and asking questions of it and saying, what would be good questions to ask? Literally, I was going through all of it. Love it. Amazing. That's what's going to happen. The next generation, they're going to do that. We either adapt to it or we're going to be dinosaurs that are left behind.
Totally. No, absolutely agree.
I often think we're very good at predicting 6 minutes ahead, maybe 6 weeks. What do the next 6 months and 6 years look like in natural capital, Carl?
It's a good question. I think it feels to me like we are on a bit of a cusp of, some fairly significant flows about to be unlocked into the space.
Oh my God. I adore that so if you go speak to people in the NGO space, DEFRA government, they are mourning the end of sustainability environment. And they're saying no one's doing anything. Everything's stopping. I don't feel that way at all. I feel exactly as you just described. And I think it's because the philanthropic and government grant taps being turned off, and they're so wedded to that being the funding stream, they're not considering the institutional, the private, the actual capital that's there.
Yeah.
That can come. I feel exactly the same as you, that we feels like we're on that like that. We'd never felt more momentum in the business with OC. The inflow, the direct conversations, the opportunity has never felt more momentum.
Yeah. No, I would agree. And I think, look, there's a place for all kinds of capital, right? And the different projects require different kinds of capital. But, I do think that for all the benefits of this kind of public capital or, first loss capital or blended finance, to some investors that puts them off, right? Because there's a question about, particularly around when you have government grants, how sustainable are they? Are they going to be taken away? Are they going to get changed?
Everyone believes they're real anymore.
Only look at the peatland debacle in Scotland, right? For example, how many times the policies kept changing. And I'm not close to all the detail, but I know even over the sort of 2 or 3 years we've been looking at it, multiple kind of changes of views about how it's going to get supported, how much money is going to be put in, etc. And I think that doesn't help investor confidence. It's better to, there's a clear thesis here that we can make a commercially investable proposition.
Look at the first loss capital that Finance Earth and Federated Hermes secured from DEFRA. They did amazing work to do that and move the market forward, and love those guys completely. I don't think anyone believed DEFRA were ever going to release it. I'm not sure they're legally allowed to. During my time in working closely with them, my understanding was as soon as it was demonstrated that the market could perform a function, state aid said they couldn't do it anymore anyway. And almost by it being first loss, if others come alongside of it, I just had videos of them saying, oh, well, you've raised some now, we'll have that back, thanks. And I wonder if investors thought the same, and that's why they didn't get it away. Again, shout out to Federated Hermes and Finance for moving things forward. That was brilliant. But just think people, actual sophisticated investors, don't believe it.
I think it's quite a complicated model. I mean, I don't know anything about the details of that, but I think it is quite complicated. And even when you're running an institutional fund, right, you want people who are kind of philosophically aligned. So, to have a lot of pension funds, a lot of insurance companies who have the same view. I think having, a lot of family offices or private capital, not that there's anything wrong with that, but putting that along inside institutional capital, even that's quite complicated to manage in terms of, long-term alignment, making sure everyone's, working towards the same deliverables around returns.
You mentioned a pension fund there, just reminded me. So we're recording this about a week so after we got the announcement from NatWest Cushion that they were going to make an allocation directly targeted at natural capital through Aviva, which is awesome. We've got Veronica, their CIO, coming on to talk about their thinking around that. Mm-hmm. And they've got lofty aspirations in terms of scaling. 25 billion they want in the UK to give that allocation moving forward. What I really like about their model links right back to what you said at the start. When you're looking for a project, there's got to be a story there that you can see that value creation.
Yeah.
On their renewable energies, that they've got an app for their members where if they drive past a wind farm, it pings to say your investment is looking at this. And I know they want to do the same with their forestry projects and things like that. They've come out. And I think people are, we have to remember with institutions, it's some of the most democratized investment we can have because, even in the debate around land ownership, if a pension fund buys land, its members own it. Yeah, and I think people often forget about that.
Yep. Yeah, absolutely. I think that we've got to remember that institutional capital, fundamentally, it's for the benefit of all of us in society, right? Either directly or indirectly. Yet I think there is a perception back to where you started, particularly from maybe some in the kind of environmental NGO world, that actually this is a bad thing. No, it's a good thing that we're putting this capital to work. We all know how big the nature finance gap is, and however much kind of institutional, corporate, philanthropic, blended finance, all of the above. There's such a massive gap to fill. I don't think we should be being pernickety about any of those sorts of capital. We need them all to work, and they'll all work in different ways in different projects.
One of the lines I've used quite a bit this week, and please tell me if I'm wrong on this, but my line has been that investors are agnostic about the solution as long as you present them with a viable, high quality, like risk-adjusted investment with a return. So I think you'd be rare to find someone who, if offered the same return with the same risk envelope, would choose gas and oil over natural capital. I just think the sector hasn't offered an investment outside of your work. I'm talking about sort of the pure conservation space. I just don't think we've offered that product yet that people believe in and will provide the return.
No, I think if you offer the right product, I absolutely agree. I think all the attributes are there. But I think that's the reality. I mean, I think the institutional space is becoming better served, but for kind of other types of investors, the opportunities to get exposure here, I think, are still pretty limited, and that's one of the challenges.
It's like you mentioned with certain operators don't work for you because you've got big reporting requirements, and I think that's the reality of the environment sector in the UK still. We've still got people who want to work half weeks, are just hobbying in this sector. When you are financially regulated, legally binding obligations to things, it's not okay to say you're not getting a report this week. It's not okay to say, oh, we don't know where that, it's just not acceptable, right? There's a level of professionalism that you guys are legally regulated to provide. And we need to get the whole sector there.
Absolutely, and I think there's a level of professionalisation around what I would call basic operational and financial reporting, and then obviously the ESG and the impact reporting
and the governance side of things as well is
and we are pushing the boundaries. We're Article 9, US FDR. We were TNFD early adopters. It is a lot of work. It's quite complicated. It's a lot of work for us, right? So to get that data from our operating partners is complicated, and I get that. But at the end of the day, we're pushing the boundaries in terms of the sophistication of that reporting, and so it should be.
I think what people often don't see about us, because we don't talk about it quite as much. So the reason I'm able to be challenging, bold, and disruptive about what we do is our chairman was the former chief executive of RVS, when they were the biggest bank in the world. We've got one of the leading family office CIOs in Britain as on our board. We've got the chief executive of low carbon and really high profile renewable firm. We've got an incredible array of very intelligent, very experienced governance behind us. We're partnering with Triodos, with Knight Frank, with Burgess Salmon, really, really high quality people and in there is knitted with data and reporting that outstrips most in the sector. And that gives us that platform to play from.
Yeah.
And without that, it's just not an investable proposition. And I think once we can have, and that's why we talk about lots of those aspects, and we should mainly talk about the governance and the structuring more. It's just, I don't think the sector's ready to find that interest. I think it's awesome, but the sector's not ready to find it as exciting yet.
I would say farmers, foresters, and environmentalists just talk a different language, right? To finance people, and without wanting to sound patronising way, sometimes they just don't get it. Why do we need this? Why do we need this reporting? Why do we need
we've always done it this way. Why do we need?
Yeah, exactly. Yeah, and they're all great at what they do, very effective. But you say you can't run an institutional grade investment product, whatever it is, whether it's a fund or whatever, and where it is in
the calendar on the back of the door.
Yeah,
it's just not going to work. And Carl, you've been incredibly kind of your time and given us an MBA into the world of nature and investment and things. I love to end on asking, what is the one question I haven't asked you wish I had?
Oh, that's a good question. I suppose you could ask me, where do I see the space in 10 years' time?
Let's do it. Give us a decade into the future.
Okay. Well, I suppose I think a number of things are going to happen. I think firstly, natural capital will become a key part of pretty much all institutional portfolios. Of that, I feel very strongly. I think
genuine asset platform.
Yeah, a genuine proper allocation. I say back to what I said earlier. I think we're at the stage where infrastructure was 25 years ago, and I think the reality of the importance of this, and not just for all of the positive things it delivers around net zero, nature positive, and impact across biodiversity, climate, water, but actually also just from an investment perspective, this is not correlated to other assets. If you're buying real assets, you've got an inflation hedge in there, linked to the markets around food, fiber, carbon, etc. I think there's a lot of good core investment reasons why this is a fantastic asset class. So I think that the preponderance of this in its own right will become more important. I think we'll definitely see more bespoke products come along. I think honestly, we've taken the view very much that we've anchored the initial iterations of our real asset strategy around farmland and forestry. I would love to have more standalone environmental assets projects as they become scalable. The thing we haven't really talked about, for example, is mitigation banking in the US. Now, I know that's sort of BNG is a micro example of that model in the UK, but we'll see that scale a lot more in other markets, I'm sure. And then we haven't really talked about water, and I think some of the stuff that Rob's doing, for example, is fantastic around, flood mitigation, around water quality. How do we really monetize water beyond its just kind of conventional sort of agricultural market?
Prizes, reservoirs that we're already seeing with planning permission saying you need your own off-grid water supply and sewage treatment and beyond the neutrality stuff. So I think that's all going to come.
Yeah. So I think the really, really interesting thing for me is, more capital will come in. It'll become a more fundamental part of overall portfolios. The other thing we haven't talked about is the oceans, right? All we've talked about today has been on land. 2/3 of the planet's covered by water. Massive opportunity around blue carbon. And again, we looked at quite a few blue carbon projects in our environmental asset sleeve. Fundamentally, they just weren't ready for us. They were too early stage. They need some growth capital. I'd hope to think that in 5-10 years' time, maybe we even have an oceans fund, right? That would be so cool, because I think there's so much money we could put to work in
So
that
vital
space.
for people, that especially in UK, an island nation, we're so connected.
Absolutely, and so much to do there. And we haven't, talk about scratching the surface of land restoration. I mean, we haven't even put our fingernails on the ocean, I suppose, in terms of unlocking the potential for marine net gain, or for really kind of building out investment in that sphere. So I think it's super exciting, really interesting space to be in.
Carl, love it. Thank you. You've been very generous with your time. We really appreciate it. We've got to get you back for part 2 in the next year or two.
Would love to come back. No, and I appreciate you having me.
Man, thank you.
Cheers, Rex. Thank you.
Appreciate it.